The United States of America, once seen as the strongest and most stable economy in the world, is standing on the edge of a financial cliff. Behind the confident speeches and smiling politicians lies a frightening truth. The American government is drowning in debt, and the crisis has grown to a size that almost no one truly understands. Today, the national debt has passed $37 trillion. That number is almost impossible to imagine. It is larger than the total value of all goods and services produced by most countries on Earth combined. For years, the American government has been spending more money than it collects, borrowing endlessly to fund wars, social programs, and political promises. Now, the time to pay the bill is coming, and the question everyone is asking is this: can America survive its own addiction to debt? The way this crisis began is both simple and terrifying. Every year, the U.S. government earns money through taxes from workers, businesses, and imports. But year after year, the government spends much more than it receives. When that happens, the government borrows money to make up the difference. This borrowed money comes in the form of U.S. treasuries, bonds, bills, and notes that the government sells to investors around the world. When a person or a company buys a treasury, they are essentially lending money to the U.S. government in exchange for interest. In theory, this system can continue forever, as long as people believe that America will always be able to pay back what it owes. But that belief is starting to crack. In the next 12 months alone, the U.S. government must sell $11 trillion worth of new treasuries. $9 trillion of that is to refinance old debts, and another $2 trillion is new borrowing to cover current overspending. The problem is that investors are no longer as eager to lend. Many foreign governments, especially in Asia, have reduced their holdings of U.S. debt. When fewer people are willing to lend money, the government has to offer higher interest rates to attract buyers. That means the cost of borrowing becomes even higher, adding to the vicious cycle of debt. Every 1% increase in interest rates adds about $370 billion a year to the government's interest payments, nearly half of what America spends on national defense. This is a financial time bomb ticking beneath the U.S. economy. Former President Donald Trump, during his second term, promised to fix this crisis. His original plan sounded bold and logical: balance the budget, reduce government spending, and start paying down the national debt. To lead this mission, he appointed Elon Musk, a symbol of innovation and efficiency, to head an initiative called DOGE. The idea was to cut $2 trillion a year in government spending. In a nation that spends roughly $7 trillion a year, that goal was almost heroic. But the reality was crueler than the dream. Cutting spending so drastically would mean shrinking government projects, reducing federal jobs, and slashing contracts that feed into almost every sector of the American economy. In simple terms, it would mean economic pain, a deep recession, perhaps even a depression. Politicians feared the reaction. Lobbyists, special interest groups, and government agencies fought back. The plan faced enormous resistance from inside Washington itself. Soon, the DOGE initiative collapsed. Despite official reports claiming that it saved $25 billion over 10 years, these savings were mostly theoretical, based on projected cuts to long-term leases and hypothetical contracts. In real terms, government spending did not fall. In fact, the deficit, the difference between income and expenses, became worse in 2025 compared to the previous year. Trump's promise to balance the budget and reduce the debt had failed, just like the promises of many presidents before him. The machine of government spending was simply too big to stop. But Trump, known for his refusal to accept defeat, came up with a new strategy, one that mixed financial engineering, political pressure, and unconventional thinking. This time, his plan did not focus on cutting spending. Instead, it aimed to increase the demand for U.S. treasuries, to make people and institutions around the world want to lend money to the U.S. government again. The logic was simple. If more investors buy treasuries, interest rates can stay low, and the government can continue borrowing without collapsing. To achieve this, Trump turned to two powerful and controversial ideas, cryptocurrency and gold. In July 2025, Trump signed the Genius Act into law. On the surface, it seemed to be a law supporting innovation and blockchain technology. But in reality, it was a financial maneuver designed to connect the fast-growing world of digital money with America's debt problem. The Genius Act required that all stablecoins, digital tokens designed to mirror the value of the US dollar, be fully backed by US dollars or short-term treasury bills. In simple words, for every stablecoin that exists, there must be a real dollar or treasury bill stored safely in reserve. At first glance, this may sound harmless, even reasonable, but beneath the surface, it was a strategic move to create massive new demand for treasury bills. The reasoning went like this. The global cryptocurrency market is expanding rapidly. As more people buy and hold cryptocurrencies, especially stablecoins like USDT and USDC, the companies that issue these stablecoins must buy more treasury bills to back them. Today, the cryptocurrency market is worth around $4 trillion, and stablecoins account for nearly 300 billion of that. If that number grows, and many believe it will, then the demand for treasury bills could rise significantly, helping the US government finance its debts at lower interest rates. In essence, Trump's government was trying to use the energy and money of the crypto world to support the traditional financial system. But would it be enough? Analysts quickly pointed out that even if the entire stablecoin market doubled, the total value would still be tiny compared to America's total debt. The US. Treasury market is so enormous that a few $100 billion of new demand would hardly move the needle. Still, Trump's team argued that the plan could buy time a few more years of stability before the next crisis hit. The goal, they said, was not to solve the problem forever, but to prevent a financial explosion right now. While crypto offered one path to delay the crisis, another idea emerged from deep within Trump's circle, the return of gold. Throughout history, gold has been a symbol of trust and value. For decades, the US dollar was backed by gold, meaning every dollar could be exchanged for a fixed amount of the metal. That system ended in the 1,970 seconds, allowing the government to print money freely. But now, with the dollar's credibility weakening, some advisors suggested reviving the link between gold and US debt. One proposal was to issue gold-backed treasury bonds. Instead of paying investors interest in dollars, the government would promise to repay them in physical gold at maturity. For example, you lend the government $4,000 today, and in 30 years, you receive 1 ounce of gold. If gold's price rises, the investor benefits. For the government, this would mean raising money now without paying interest. The idea came from Judy Shelton, Trump's former economic advisor, who has long supported a return to gold-based stability. Shelton had once been nominated to the Federal Reserve, but was rejected by Congress because her ideas challenged the Fed's power. After all, central banks can print dollars, but they cannot print gold. Another, even more radical idea was for Trump to revalue America's gold reserves. The US. Government owns 261 million troy ounces of gold, officially valued at just $422 per ounce. In the real market, however, gold trades for more than $3,400 per ounce. If Trump were to officially revalue that gold to its market price or even higher, it could instantly create trillions of dollars in new value on the government's balance sheet. The difference between the old valuation and the new one would be transferred from the Federal Reserve to the Treasury as newly created money. In theory, this could give the government $4 trillion for free, enough to cover a year's worth of borrowing, or reduce the national debt significantly. What makes this idea shocking is that it does not require Congress's approval. The president has the authority to revalue gold by executive action. The US has done it before. During the Great Depression, when Franklin Roosevelt raised the gold price to stabilize the economy. If Trump were to do the same today, perhaps on the symbolic date of the 4th of July 2026, the country's 250th anniversary, it would shake the global financial system. Gold prices would skyrocket, the dollar would fall, and the world would witness one of the most dramatic monetary shifts in history. Some say it would save America. Others say it would destroy confidence in the dollar forever. The truth is that both the crypto plan and the gold strategy reveal the same underlying problem. The US government has lost control of its finances. For decades, politicians have avoided hard choices. Cutting spending means losing votes, and raising taxes means angering voters. So they keep borrowing, pretending that the future will somehow pay for today's luxuries. But the future is here, and the math no longer works. America's debt is growing faster than its economy. Interest payments alone are becoming one of the largest expenses in the federal budget. Soon, the government will spend more on interest than on defense, education, or healthcare. That is the definition of a debt trap. If the US fails to attract enough buyers for its treasuries, interest rates will rise even higher. Higher rates mean businesses borrow less, consumers spend less, and the economy slows down. At the same time, the government's cost of borrowing skyrockets, forcing it to print even more money. This combination can lead to inflation, currency devaluation, and eventually loss of confidence in the US dollar. Already, countries like China, Russia, and members of the BRICS alliance are exploring alternatives to the dollar for international trade. They are buying gold, building digital currencies, and creating payment systems outside the US banking network. If the world moves away from the dollar, America's ability to borrow cheaply will vanish overnight. The consequences of such a scenario are almost unimaginable. The stock market could crash as investors flee from dollar-based assets. The housing market could collapse as mortgage rates soar. Government programs could face sudden budget cuts, leading to chaos in healthcare, education, and pensions. For ordinary Americans, it would mean job losses, rising prices, and social unrest. For the rest of the world, it would mean the end of an era, the collapse of the financial system that has dominated global trade for nearly 80 years. Yet, amid this fear, there is still a chance to change course. The first step is honesty, admitting that overspending is the real enemy. No amount of financial engineering, whether through cryptocurrencies or gold revaluation, can replace discipline. The U.S. must face the painful truth that its government spends too much. The second step is restructuring priorities. Trillions are wasted every year on inefficient programs, subsidies, and foreign adventures. Cutting those expenses would be politically difficult, but economically necessary. The third step is rebuilding production. America needs to bring back manufacturing, not just for jobs, but for stability. A country that relies on others for its goods cannot remain powerful forever. However, rebuilding factories and infrastructure requires investment, and investment requires low interest rates. That is why solving the debt problem is also key to rebuilding the nation. This is the paradox America faces. It must spend less to reduce debt. But if it spends less too quickly, the economy collapses. It must keep interest rates low, but low rates encourage more borrowing. Every path leads to risk. That is why Trump's approach, though controversial, tries to buy time. By tying crypto and gold to the treasury market, he hopes to slow down the collapse long enough to prepare the next move. Whether that next move will be a true reform or another illusion remains to be seen. For people watching from outside the United States, especially in China and other major economies, this situation is both a warning and an opportunity. It is a warning because America's debt crisis could easily spread across the world. Global markets, trade, and currencies are still deeply tied to the US system. If the dollar falls, every nation will feel the shock. But it is also an opportunity, a sign that the world may be entering a new financial era where power is more balanced. The rise of gold, the growth of digital currencies, and the push for local manufacturing all point toward a world less dependent on one single currency. Still, time is short. If nothing changes, the debt will keep growing, interest payments will consume the budget, and trust in the dollar will erode. Eventually, the system will break under its own weight. Trump's plans, the Genius Act, and the potential gold revaluation may delay that day, but they cannot prevent it forever. The only true solution is to confront the cause, the endless appetite for spending and borrowing. America must rediscover financial discipline or face a reckoning unlike any in its history. As the country approaches its 250th anniversary, the symbolism is hard to ignore. The United States was born out of a fight for freedom, independence, and self-reliance. Yet today, it is enslaved by its own debts. The coming years will determine whether America can find the courage to change or whether it will continue down the path of denial until the inevitable collapse. When that moment comes, it will not only redefine America, but reshape the world. The fear is real because the numbers do not lie. $37 trillion in debt, trillions more each year, interest rates rising, and political leaders fighting over illusions instead of solutions. It is a picture of a giant running out of breath, kept alive by temporary tricks. The question every citizen, investor, and government should now ask is simple. How much longer can this go on? And when the final moment comes, who will be ready for the new world that follows? The United States still has the power to change course, but time is running out. Real leadership would mean facing pain today to avoid disaster tomorrow. It would mean accepting smaller government, reducing wasteful programs, reforming taxes, and rebuilding the productive base of the economy. Without that, every promise, no matter how clever, will be nothing more than another illusion built on borrowed money. The world is watching, the markets are waiting, and the future of the global financial system hangs in the balance. America can still save itself, but only if it chooses truth over comfort, discipline over denial, and reality over dreams. Otherwise, the next great American crisis will not just shake Wall Street, it will shake the entire world.